Hey, this is Rod Cleef, and you are listening to the Mailbox Money Show with Bronson Hill.
All right, welcome to the Mailbox Money Show. I am super fired up today. I'm Bronson Hill, the host of the Mailbox Money Show. I've got Andy McMullen, who's an amazing guest talking about build-to-rent communities, which is amazing. Spent a lot of time with this guy, super inspirational, both in what he's doing in the business as well as just him personally. So excited to have him here. I've also got another inspiring friend of mine, Nate Hambrick, who's the two-time best-selling author of this most recent book, The 18 Laws of Leverage, which is amazing. So, Nate, how are you today, and what are you looking forward to with this interview?
I'm doing well. I'm excited to chat with Andy because the old adage is that the riches are in the niches. And so I know Andy has a lot of specialized knowledge that I probably do not have. So I'm excited to learn. This is going to be awesome.
I love it, man. Well, I'm excited. So, anyway, I want to talk about this niche that a lot of people don't know about. They call it BTR, which, I was saying if you're a waiter and you did shorthand, you'd be like, that means butter, but it actually means build to rent. And so, for the rest of us that are not, build to rent specialized, it really makes sense as an investor to look at, is it a great time to buy multifamily? Is it a great time to buy and hold single families? Is it a great time to buy precious metals? Is it a good time to buy a business? And, I think there's a lot of compelling reasons right now where it's a great time to be a part of build to rent. And we're going to get into that and just kind of some of the communities and what Andy's been doing for a long time. So Andy, so good to have you. I think back on the Mailbox Money Show. Love talking with you. Always learn something. But how's it going today? And what's happening in your world?
Yeah, it's so great to be here with you guys. I really appreciate you having me on. I'm just fired up about just real estate, business, talking about mailbox money. So wherever we'll see where this conversation, as you know, sometimes we start Bronson and we just go this way or that way, but it will be enlightening nonetheless.
Yeah, exactly. And I think as an investor, it's great to have be interested in everything. And there's a difference between shiny object syndrome, where you're like interested in everything, where you like do everything. But these conversations are like you're getting educated on everything, because there is a time to make a pivot as an investor of like, if you were a multifamily investor, there are great opportunities right now, but a lot of people have made pivots into other things that make a little more sense. So Andy, you've been doing this a while. You've been a guy who's been in the space for a long time. You're a pretty soft-spoken, kind of mellow guy, and don't really toot your own horn, but you've done just some exceptional things for a very long period of time. Why don't you give people a little bit of idea of your background and kind of what brought you to build to rent?
Yeah, so I've been in this game for, as you know, quite a while, right? That might be the strongest thing about my resume is that I've been able to stick around, right? So I've been in and out of multiple cycles. Kind of started off in the office game in Los Angeles, kind of putting together real estate deals, and then we started doing multifamily, maybe the 2010s. And development really started in development doing some built to some live work space. If you remember what that kind of phase was like, you would live and you'd work in the same spots, and they were usually in kind of the Venice or the Portlands of the world. And then over about the last 7 years, we just started to see this trend of folks now, instead of just buying these scattered homes like Blackstone did right after the great financial crisis, and trying to manage them across county, started to see developers building them next to each other, just like a pulled apart apartment complex with all the amenities that an apartment would have, without the kind of stigma of being that lone renter in a neighborhood. So that's kind of where we started to see the trend, and then connected with some partners that had been doing it for 15 years, and ever since then we've been really dialed in on trying to build this trend out as much as we can.
So we've been looking at this for a bit here in Pasadena after the fires, the idea of building new construction. The idea of build to rent is a little different, but if you just build and you sell, you create a big tax issue, right? You have a lot of gains in a short amount of time, you create a tax issue. With build to rent, it kind of gets around that. And you guys have found a way to really cash flow pretty quickly on these types of deals. So talk about, I think that's one of the most compelling elements, is that a lot of people are looking for cash flow, and you guys have something that really is a silver bullet, because you can't fire yourself or leave your job or, quit your business. How are you going to make money unless you are able to have some cash flow? So how does build to rent generate cash flow, and how long?
I don't know how many conversations I've had with you, Bronson, where you're like cash flow, cash flow, cash flow, and we're on the development side. And so we had to figure out a way to bring cash flow to our development deals. So fine, I think you'll be happy. We've listened to a lot of the investors, and as you know, a lot of investors got burned a little bit in this multifamily phase. And as a result, people really want the current pay. They like that idea of having this mailbox money that in typical development doesn't always usually come till 3, 4, or 5 years down the road. So what we decided to do is let's create a class that's just for private lending. So we will guarantee, which obviously people think I'm a little bit crazy, but we've seen enough traction in our projects with enough experience to know that we can build a class of private investors, pay them the 10 to 12 to 14% depending on how much they need per month. And that would be, instead of the equity, we keep more of the back end. We just have to obviously guarantee the front end. And it just has worked out that we've been able to raise quite a bit of capital that way in the last, few months.
Do you feel like that would apply? Because that's very unique. I hope you appreciate how unique that is to say, hey, we'll take a lot of the profit on the back end, but here's 14% cash on cash. Like, I hope you realize how special that is. Yeah. Is there something specific about that model and the build to rent that makes it work? Or is it just that you found a way in general? Like, is this applicable for other traditional multifamily, or what did you have to change to make that possible?
Yeah, I think it is definitely an education change. And we do have to, there's some risk for us as the primary lenders, right? We've got to have established credit, right, where we've got enough wherewithal to cover those losses, right? Because we're personally guaranteeing, and not only that, but then we're delivering what's called a consent judgment or a pocket judgment, which basically just means that, look, we're going to sign a judgment now, put it in the drawer. If we default, then you've already got part of that legal work already done. And the reason that we're trying to do that is because we know that there is a lot of, there's a lot of kind of reluctance for folks to be lending to folks that are only on, one property or two property as a second trustee. A lot of lending now is only a first trustee. I personally feel like when I'm lending other folks, I want to see that they've got the track record and the balance sheet, and that they're willing to sign a guarantee. So for me, I think that's the strongest kind of position that you can be in as a lender, is if you've got that diversification on the real estate owned and the personally guaranteed.
Do people, when they invest, do they get any depreciation, or is it they're pretty much getting like cash flow as well? They're not getting the other tax benefits, correct? That's
correct. Yeah, if you're a lender on the project, you wouldn't get the equity. That's not to say that we have done some balanced, right, where we might do a blended part of that is a loan and part of that is the long-term equity, and then for that equity piece, we can structure it in such a way that they're getting some depreciation. And typically with development, as you guys know, it's really you're only benefiting from that depreciation once the units are in service, right? So once they've got that C of O. So you kind of have to find that particular year or 18 months that you're actually turning units from vertical into in service with the certificates of occupancy.
Right. And then once you have units, they are typically easier to rent. One issue we've had here, and you're doing a lot of stuff in Louisiana area, but in LA, it's harder because you develop so much value from an equity standpoint here, but the rents are not that high. So from like the loans, a lot of people do DSCR loans, which means your debt service coverage, like how much you're actually generating in income from this property, which is not a lot here, but it might be much more in a basis where you're at. So it makes more sense to do build to rent. What kind of rates do you get for the long term when you actually build these things?
Yeah, so when we refinanced just recently, so what we'll do is we'll buy the land with our money, get it entitled, then you're going to need a construction loan, right, for the horizontal piece, right, the streets, roads, utilities. Then you'll refinance into what they call the vertical loan. Your rate's a little bit better. Banks think there's a little less risk once you're building vertical after you've finished all the streets, roads, utilities. And then once you stabilize, once you get those units leased, then you're going to get your permanent rate. So our permanent rates are the 6s. Obviously, we'd much rather be the 4s or 5s where they were. But that's typically kind of the way that it's structured.
Gotcha. That's pretty good. That's not bad at all. What are the, I guess when you're looking at build to rent, I mean, I imagine there are certain communities or areas of the country it makes kind of, we talked about the difference between LA and Louisiana. Is it just when it's cheaper to build and rents are higher, that just makes, that's an equation that you generally like, right? Is that, so parts of the country that would make sense? And then population growth as well?
Yeah, it's interesting. I remember being on a panel with you, and we talked a little bit about the multifamily game. and how much over the last couple of years there's been some real, struggles. That same weekend, I went to a built to rent conference, and everybody's kind of talking about how great built to rent is. However, what I learned was a lot of those big markets that everybody kind of talks about just in general terms, right? They talk about the Dallases, the Houstons, whatever working in Florida, is they don't consider that each of those markets has a submarket and a lot of nuance, right? Because what's happening in those large markets is you build something, and then you've got another build that's coming in 5 years later that's sucking out all of the residents from the previous, right? And that's kind of consistent. So what we try to find is those secondary, tertiary markets that have the strong growth. They've got actual economic growth. They've got population growth, but they're a little more steady. So in that kind of Lafayette area, Baldwin County is a good example in Alabama, parts of North Carolina that we really like, some parts of Texas. But I think, as you guys know, every market has its own kind of DNA. There's ascending markets in the larger, areas, and then there's descending markets in those larger areas. So we kind of try to figure out what it is that calculus, and it's part of the art, of course, but you got to have at least the fundamentals where you got the growth and the economic growth and population growth.
Makes sense. I think it's really, it's interesting how we find niches and what we think is important. So for you to be someone, like if someone is going to start this, obviously they can be a passive investor. If somebody's going to start to do build to rent, I mean, do you, I imagine you partner with a general contractor, you've got to kind of like how do you keep a general contractor on track? That's, I guess, the issue with any building project or renovation, right? How do you keep them on track?
So much about what we do, and I know there's a lot of listeners that are out there in various businesses, right? So with every business, there's these kinds of who on your team can you have doing the task oriented work, looking at the contracts. We're a big believer in our company, Working Genius. I don't know if you're familiar with Working Genius, yeah. Pat Lencioni. So we want to make sure that we've got the people that have that tenacity in the seats, that are reviewing the contracts, reviewing the timelines, staying on top of kind of the real task oriented, and then we're kind of looking at a big picture, figuring out when it is that we can pivot, how we discern. So to answer your question, every contract in relationship is a little different, and even if it's in the contract, there's got to be a certain level of trust and kind of intuition, right? Because if you're pounding on your contractor just because he didn't fill that date, then you're kind of potentially losing on the back end, right? Because they're looking at other places that they got to work. So there's a lot of nuance in these things that you always kind of have to consider.
Do you ever use performance clauses where it's like, sometimes I've done this before, where it's like, how long is it going to take you to finish this bathroom remodel? It's going to take me 2 months. Okay, great. How about we give you 9 weeks, and if for some reason it takes longer, are you willing to get reimbursed less for every day, or give a bonus if it gets done a certain amount of time? Do you guys do things like that, incentives for builders or anything?
Yeah, I like to do it the other way, where it's incentives, right? You just kind of hit it, right? Instead of these kind of penalties. Now, of course, if it becomes egregious, you do have to create in some penalties. I'm just saying that sometimes you're not going to act on those penalties. If you're trying to keep your guys moving, you might, maybe at the end of the contract, you got to kind of discuss. But it's more for me, if you say, hey, look, you can get it done in 10, I say, I really need it done in 8. If you can do it in 8, I'll give you, 30% premium, whatever that is. That seems to be the biggest. And again, a lot of the contractors that we're working with are larger companies, right? So you also have to kind of figure out, how can I get on the ground with the people that we have on the ground and really benefit the actual workers that are the ones, we're in Lafayette, Louisiana. If it's raining in the morning, we need them back, at work in the afternoon. So how do you get those people to really keep pushing? You got to find the actual people that are doing the work rather than the guy that's back in the office kind of barking orders,
Yeah.
How do you do that? Like, do you drive out to your different facilities and develop personal relationships with it? Like, how do you actually implement that?
Yeah, so much of what we do, which is I think has been a game changer for us too, Nick and Nate, is what I'll talk about on the kind of project level. But yeah, all of our subs, all of our general contractor, Derek, who Bronson, our partner, they're spending quite a bit of time on the project. So they're meeting the people that are actually working in our development projects. And in our development projects, just for reference, are in that kind of 100 to 300 unit range. But one thing that's really benefited us at the project level, and as we're constructing units, is we have what we call a community resource officer that sits at the project. This is one of the first renters. They're creating relationships with all of the community, right? So they're getting referrals, putting together community events, dinners, Bible studies, whatever it is. And then they're also creating relationships with the subs there so that we can know who's the guy that's really kicking ass or who's the group that maybe needs a little push. So it's hard to enforce, of course, Nate. It's only as good as the relationships that you can create. But it is something that we are intentional about.
I love that. Yeah, I think it's so important to continue to improve processes and all that, and that's great. And it's interesting that you said the build to rent. It's funny. Real estate is very siphoned, and it's interesting how single family. If you're an owner, it's hard to want to sell right now because you typically have a low rate. Most people that have owned for the last 3 years or more, they've got a sub 4% or 3% rate, which you can't get now, right? So the asset really is the loan. And so, but then other things open up where it's like, okay, it's an opportunity here in this, and we're doing development with modular manufactured homes in an urban area. You're doing stick build in an area that makes sense, and then you're going to do a build to rent type of structure, which I think is really interesting. Do you guys also do? I know you do for people. You do the steady cash flow kind of as a lending piece for that. Do you also? You said you do provide equity as an option if people want to come in as an equity investor.
Yeah, we do. Typically, the way that it'll work was we have a blended class. So there's a certain amount of, let's just say, a bucket that's above the primary that we need. We've got to underwrite, of course, for the debt service as we go. So that's kind of the most conservative way to underwrite it. And then we also have, sometimes we've got pref equity that comes in or institutional, family office that comes in. But yeah, typically the way that we underwrite is, and if there's a mom and pop investor, retail investor, they can put $100,000 in their current pay and $100,000 in the back end equity. We can do it that way. One of the things I've been kind of interested, and I'm curious what you guys think of on the interest rates, is that we've kind of got a lot of these projects that are now starting, and maybe you're seeing it in your Altanita developments, that you've got a lot of folks that are kind of stuck in that kind of 4%. I think it was something like 60% of loans out there now are under that 4, and maybe there's even more that's under the 5. What's kind of, how are you accounting for that in the future as you guys are building, with interest rates? And
it's a good question. Yeah, we've been looking at this many different ways because initially I thought, well, I'm going to become a licensed dealer for modular manufactured homes in the state of California. So I did that. It took me almost a year. I got it done. Now the challenge I've realized is that they build these homes so quickly that you can be early, right? You can show up and there's no comps because nothing has been built in the last 12 months because the fires just happened a little less than a year ago. So it could be 6 to 12 months before we get comps. So if we put it out now, our build cost is just, there's a very small margin with some of the older homes that are there. And so we have to kind of wait for some of the newer construction that comes in so they can comp them against them, hopefully. But I think interest rates, it is interesting. 40% of homes nationally have no debt on them. 40% of single family homes have no debt on them. And then I think of those that were the 60% that are left, the majority of those have sub 4% loans. So if you own a house, or it's kind of discouraging for somebody who's a young person who doesn't own a house, right? Is that, are you ever going to be able to be an owner, right? Because they have these long-term fixed debts or fixed rates that are in there, and people aren't going to sell it. It can literally take years and years and years to be able to reset. So that's a challenge when you have long-term fixed rates that are super low for a long period of time. If rates were allowed to float, let's say like Canada, where they reset every 2 years or something, or every, I think 2-3 years, probably the price of real estate would have come down for single families quite a bit, right? So it's just funny, it's like you have these things. And then we saw in multifamily where some of the values went down by 30-40% over a couple of years between 21 and 2023. So it's just an interesting time in a lot of ways. I mean, I think that what we're looking at is I think find the opportunity that makes sense with the buying price that you can buy at. I'd rather have a little bit higher of an interest rate if it cash flows, and then just be able to know that you can refinance potentially later. But Nate, do you have any thoughts on that, on the interest rates and kind of where we're at?
Yeah, I mean, it definitely makes you get a little bit more creative. And I think that's what I love about real estate and entrepreneurship in general is that the problem can be seen as the problem, or the problem can be seen as the opportunity, right?
Right.
And so, yeah, there's a lot of people with single family. I was just talking to one of my neighbors. I met him at the park. My son's, 16 months old, and met him, and he's like, he's a home builder, and he's like, well, we thought about moving, but we have a 3.2% interest rate, so we're probably never going to move, and it's kind of one of those ha ha things. But in that, there are so many opportunities to do out of the box things to help you win with the problem. We'll call the problem, I hate to call low interest rates during COVID a problem, but for all intents and purposes, we'll call that. So you can always do subject to, right? Pace Morby does a lot where he buys homes subject to. You can sell your home subject to. You can do owner financing and keep your loan. You can, buy the next house, keep your current house, rent it out, and as long as you sell it within 3 years, you don't have to pay the capital gains on that. There's so many different creative ways and creative outs that you have that other people aren't thinking about, which is where the opportunity lies. And so that's the way that I like to think about a lot of things, is that the challenge is only the challenge if you don't find the opportunity in that. And so actually, I'll float it back to you, Bronson. What are some challenges that you've noticed within real estate, within your own life, that you've chosen to see as opportunities, and so you've created them?
Well, that's great. I'll have Andy answer this one too. I was just looking up on ChatGPT here, I've heard this word, the word crisis in Chinese. It can do two word characters. One is for danger. The other is for pivotal point or opportunity, right? So it's interesting that every challenge presents an opportunity. There's always a silver lining. So when one door closes, another opens. And we just had a great interview recently, just today, earlier with Rod Khalif, and just the idea that it's either success or it's seminar. So there's lots of seminars. There's lots of things in my life that we've had deals where we've had, major challenges or losses on it. It's really difficult, really hard conversations with investors. But I realized I'm going to just learn everything I can. I'm going to take responsibility for what my part is and learn and grow, and then realize we're in investing, and nothing is 100%. Even money in bank accounts, there's risk. If you put money under a mattress, there's risk there. So life is inherently risky. And when we blame or we point fingers, we don't really get the lessons. We don't learn. And so I want to be somebody who learns from everything. So I think that just from a mindset perspective, it's so important that if you're an investor and you've had a loss or you've had a challenge, it's so important to say, well, what's my lesson? What's my learning here? Because I've had some expensive seminars, right? And I think we all have had things we've gone through. We're like, oh, wouldn't we go? Whether it's a relationship, it's an investment, it's a job thing, it's something else that happened. It's all kind of helping us grow. Andy, what do you have to add to that? I know you probably had some challenges.
Yeah, we think about this a lot because obviously in real estate you're always going through some cycle, right? And many of them got pretty bad, right? So you're constantly reevaluating, learning. We like to think of that kind of disguised growth. That's the pain, right? That disguised growth. You're going through it at the time. And you're like, this sucks. But if you're kind of thinking, this is where these lessons, then this is kind of how, for me, it's kind of how God brings these to our attention. And that kind of pain, plus reflection is progress. That I think all of that's very true, even though it may sound trite and it may not feel like it. Now, I think with real estate and investing in general, for most people, they're not willing to get back into the arena after they've lost badly. And I think that's the part that I think people really need to think about. You can control the process. You can kind of control many of the outcomes, but many of them are too impossible to predict. No one would have predicted that interest rates at this level went that high. But as Nate mentioned earlier, that's part of the opportunity, right? Is to kind of figure out where that is. So I think that investors over the long haul, and that's part of what Buffett talks about. It's part of what was this part Munger talks about. Is it is over time becoming that learning machine, and you've got to pick those opportunities. But if you bow out, you kind of bow out at each stage, at each investment. You're never really learning from it because you're just kind of what we call resulting. You're kind of playing the results without thinking about whatever that process was that got you, to the next level.
Yeah, I think that's huge. I think it is just so important to, take those moments. My brother actually had a time where I've only been fired from one job in my life, and I was fired from being a youth pastor of all
No
things
kidding.
at a mega church. And they're just like, "Yeah, I just don't think it's a good fit." And, your last day is Tuesday, and it was on a Friday. It was like, it felt so like, oh my gosh, what in the world? They just didn't feel it was a good fit, but it came like very suddenly. It was right after the holidays. It was the whole thing. And to me, it was a big deal. And, I think that the reason I share that is, there was a choice there of, okay, am I going to let this defeat me? And one thing my dad has always said to me is, well, you're so resilient. You have all this thing. Well, it's like, well, I've learned to be resilient. I've been through a lot of stuff, right? I've been through that. I went through a divorce. I went through other things in my life that really allowed me to learn, like, oh, okay, like this isn't my first rodeo. And so sometimes, like, there's this quote I've been quoting. I have a men's group that I have on Tuesday nights, and I've been quoting this quote of like, this is John F. Kennedy said this. He said, don't pray for easier lives. Pray that you'd be better.
Yeah.
And I just thought, like, that's so good, right? Because it's like, I pray for my life to be easier. Oh, bless this, and this would happen, and everything would be perfect, or just be super easy, and all the money would come to me. And it's like, it's not always that way. But what happens is I'm getting better, and I'm learning, and I'm growing.
You get better. You get that's the my son had this. We had this conversation almost a couple weeks ago where he said, hey, look, Dad, it's got to get easier, right? He's going through, he's started high school when he's got,
right,
multiple studies and sports, and you're trying to get it all in before you get to bed, etc. And he's like, does it get easier? And I said, no, but you know what does? The hard, you get better at the hard, right? You get better at kind of whatever that is, managing your expectations, not getting too high, too low. One of my heroes is Coach Wooden, right? He would talk about that.
Yeah.
And if we think about that, he started coaching in 1948 and he lost for 16 years before he got that first chip, right? He was just chipping away. Now he's the best coach of all time. So I think you just get better at the hard. And that's not easy for people when they're going through it, including me. That doesn't mean that I don't have these conversations with, Lord, why are you bringing it to me this way and this time? But you do kind of have those wrinkles. They mean something. They steal you a little bit,
Yeah. I think that's really good. I think it's just, the perspective, and this is where on the show we do talk about different assets, but I think it's just so important to be a resilient person. And this is where my friend Chris Martinson talks about like the 8 different forms of capital, right? It's not just money. It's like you have physical, tangible goods. You have your health is one. Another one is emotional resilience, being able to like go through a challenge. Some people, like, they go through a challenge and they just melt. Like, they just can't handle it. Like, we've all watched people like that. We've maybe been in places ourselves like it, where it's like there's some difference. Oh, I don't know what to do here. And then yet you realize life is just sometimes going to be hard, but that it gets better. And sometimes I literally have had some moments the last, couple of years where it's been like, I just got to take some deep breaths. I got to do a yoga class. Got to get into a church service. I've got to, just really do some journaling or just kind of, breathing, whatever it is, just really give myself some space away, go on a trip. And I think that stuff is so good. And I don't think we really allow enough space in our lives to be able to do that, because then we miss some of the lessons that are there. Nate, you have the 18 Laws of Leverage. What are some things that kind of speak to this about that you've shared? I just love your book, but they talk about the idea of resilience and emotional, like being more resilient and kind of coming back and learning through process and things like this.
Yeah, so one of the laws of leverage is don't do work you hate. And it's not to say that you won't ever do things you hate, because we've all been in real estate, we've all been alive long enough to know that there are things you have to face that you're not going to love. But at the end of the day, work yourself into a position where you get to choose your hard, right? One of my favorite seasons of business, and I hope this for everyone listening to this podcast, is the season where you can say no to a client ahead of time that you know is going to be a pain in the butt the entire time.
I love that, yeah.
And it's helpful for so many reasons. If you talk to 100 people, 90% of them will probably be just fine. But that bottom 10%, they're going to be a nightmare, right? They're going to wreck you emotionally. You're going to stay up late thinking about it. And they're going to ask for so many extra additional services for free. You're not going to be profitable on them anyway. And there's a beautiful place in life where you become good enough at what you do to where you don't have to take everybody's money. And it is awesome. And I think throughout life, I'll probably raise the bar. Right now, it's the bottom 10%. Hopefully one day it's the bottom 50%, right? So not doing work that you hate is helpful for that reason. And also it's helpful because you learn the skill sets you need to learn faster because you have more time to focus on that versus just putting out fires. And so to answer your question, Bronson, there's so many facets of leverage in learning how to do that well. And to Andy's point, right, life doesn't stop throwing you curveballs. It doesn't. But if you get better at managing your expectations, managing your time, not saying yes to every opportunity because you know it's going to bite you in the butt, you can spend more time focused on the skill sets you actually want to learn. And so, oh yeah, go ahead, Bronson.
Oh, I love that. I love it. Thanks for sharing. Yeah, it is. It's leveraging your learning, your skill sets. Andy, I guess that's the last question I really have for you is what is something that's really helped you to leverage your skills and your growth? And I just have so much admiration for you. Like you said, you're a pretty humble guy. You're not really touting your own horn, but you've done some phenomenal things, tens of millions of dollars of real estate over the years, and just really created this niche. What's one thing that's really helped leverage your growth over the years?
Yeah, I think Nate hit on something that we've, as an organization, as our team, that's really benefited us, and that's how much time am I spending on the stuff that frustrates me, and how much on the time am I spending on the things that really energize me, right? And it's not just the amount of time; it's transformational because it doesn't suck. It doesn't enervate you working on the things that are really detail oriented. I have discernment, and I have, I'm good at kind of supporting our team from the bottom up. So those things, if I'm in that space, I'm much more energized. I can get a lot more done. As you mentioned, Nate, even just those moments where you're just thinking about how you can make something better. I've never been good at that, right? I'm part of a C12, it's like a Christian owners organization. And one of the things that you always hear that any of these owners of these large businesses suffer from, it's the rest and the retreat. And the retreat part is whether it's taking a inspirational quote or a Bible verse and just kind of meditating on that for a certain amount of time. And you really start to think all that's chaff that's kind of in your brain that's swirling around, it starts to kind of fade away. And then you can kind of focus on what it is that's really important to that day. So that's been a real game changer, is figuring out how I can stay in those transformational parts of, like, not the menial tasks. Other people love that stuff, checking off lists, etc. What can I work that's maybe more transformational, not just a transaction?
Yeah, love that. That's huge. Well, and I just want to really honor you. You are a great guy. You come from a great place, and just really place in your heart just that you really want to help and serve and love other people, which I so appreciate. Also, the faith stuff is just super inspiring to me. So appreciate you, brother, and grateful for all the value you're bringing to people, for your investors. How can people reach out and connect and hear about your deals and what you're doing?
Yeah, thank you, Bronson. Nate's been great hanging with you guys. I appreciate it. Just legacyacquisitions.com. We've got, if people are interested in the built to rent, we've got a book there that we'd love to send them. And we just love, as you mentioned, we learn from investors of all shapes and sizes and various kind of asset classes. So please reach out. We'd love to chat more about what you guys are doing and how we can help.
Awesome, man. We'll stick around for a minute here. We're just going to kind of do a quick little wrap up here. So, Nate, I really enjoyed this interview. I got a lot out of just the, obviously being in a niche that really is working and designing really this investment for people that need cash flow and kind of turning it on its head a little bit. Usually you don't see that type of setup, but which I think is really cool. And then also just the mindset piece we talked about really things happening, that's kind of been a theme lately on this show, I think, just of the turning obstacles into building blocks, really. What are some takeaways for you?
Well, yeah, basically what you just said, that life won't stop punching you in the mouth. I upgraded it, right? It's not curveballs. Life won't stop punching you in the mouth, but you get better at taking it, and you get better at dodging it, and you get better at getting back up quickly, and you get better at all those things. And honestly, now that I think about it, it's such a blessing, because if you could achieve nirvana right now, what the heck are you going to do with the rest of your life, right? You're constantly growing, and that's actually a blessing, not a curse. And so fantastic interview with Andy, and I'm excited to apply that concept in my own life.
Awesome. Well, hey, appreciate each of you for joining us. We love doing this show. We love hearing from you. So we'd love to hear what impacted you about this episode. Please feel free to like and share it, because this is how we are able to get great guests like Andy. And so if you haven't joined our investment club, you can check out the link below and join our investment club. We'll look forward to seeing seeing you on the next episode of the Mailbox Money Show. Thanks so much, everyone. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.